Broadcasting from beautiful, tropical Vero Beach, Florida, it's Money Nation with Ed Gardner.
Good morning and welcome to Money Nation. Today's special guest is Joe Cunningham.
Good morning, Ed.
Worldview Capital. Joe, how are you?
Doing great. It's nice to finally arrive at spring. We've made it.
It was a quick winter. Quick winter.
I don't know about that. At my age,
what's up here?
None of them are quick.
Well, I get to spend a lot of time in Florida, and then my winter's only a little bit upstate New York. So that's why I think you're in Minneapolis the whole time. I think that's why a little cold for you. You got to get away more.
I'm going to come visit you, Ed.
There you go. Vero Beach. We love it.
Yeah.
Joe, let's talk about NCAA basketball.
Sure.
Talked about that a little bit last week. You see how my basketball picking skills are. Well, I picked Purdue.
I think your stock picking skills are better than your basketball picking, Ed.
My Purdue, second team ever to get knocked out as a number one seed. That's pretty hard to do. That's probably very hard for someone to do that. Pick a one that's going to lose.
Yeah, right. You should get something special for that.
Other highlights though of the tourney so far. Look at Princeton.
Yeah, that Saturday
the
night
Princeton
game
Tigers.
was exhilarating. Great game. That's not your father's 15 seed. I mean, those guys.
Oh no, they look a lot better than
good.
most 15 seeds. They
right,
look really good.
Absolutely.
And your pick was Kansas.
Yeah, it didn't fare much better. So we're, all those big schools are gone now. So it's really wide open. It should be fun. The usual suspects: North Carolina, Duke, Kentucky,
Kansas,
they're all out. So it's wide open.
By the way, that's only the third time it happened in the last 25 or 30 years. That was in the paper today.
Amazing.
But interesting enough, the second time it happened was just in 2021. So you can say actually in two of the last three tournaments, those five big schools, NC, Duke, Kentucky, Kansas, they've been out. They're not quite the dominant force in the last 3 years than they were in the previous 30 years.
So we're seeing an era of more parity in basketball, and they are making a case to let more of the mid-majors into the tournament than they do currently. In other words, we have the Power Five conferences; they all get automatic bids, and you get a host of teams from the Big Ten and we're whatnot. We're in the other conferences, and really, there's a pretty strong case to let more of the mid-majors in. Maybe they play with a little bit more zealous in their pursuit of something.
And also they had some commentators chatting about this, and they had a good point. And their point was, you got the big schools constantly. Their players are leaving, going early after freshman, sophomore year. The teams don't gel as much as, let's say, a Princeton, where they stay all 4 or 5 years together. And those teams might have a little better teamwork,
Yeah.
How about Florida Atlantic? I didn't know Florida Atlantic was even. I didn't know they had a basketball team. I live in Florida.
Yeah.
They look good. They're
good.
Still in there. Sweet 16 is an 8 or 9 seed.
Yeah,
pretty impressive.
Like yeah. So I'm kind of liking UConn right now. I think they've got the muscle. That big guy in the middle, he is a force of nature.
He is amazing. I love that guy.
And I'd like them out of the West.
My son went to Albany Academy, and the UConn point guard, Andre Jackson Jr. from Albany Academy, was in school with my son same time, and he looked great. He looked good, 6'6" guard. He's out there guarding their guy 6'6". I mean, unbelievable for a guard. And the whole a couple other guys, the whole UConn team is deep. They were draining threes, and then a while on the first half, that St. Mary's team was interesting. Yeah, they were way outsized, and it was a 1 or 2 point game at halftime. But just like against Iona, UConn came on strong in the second half and just they look like a possible contender. I'm not sure if they're as good as the top couple seeds, but they look good.
To get out of the West, they're going to likely have to play Gonzaga. And Gonzaga's got a big guy too in there, a guy with a headband and looks like he's out of the 1970s.
Oh yeah.
So that could be a war. That could be a lot of fun.
Gonzaga's always got those like hippie looking players, they're in Seattle, whatever. They got the hippie vibe going with them, Joe, let's get to work here. What's going on with the Fed meeting? Got a Fed meeting on Wednesday?
We do. Well, I mean, look, in light of what's transpired in the banking sector, it would appear that if you raise interest rates by 4.5% over the course of the year, that something's going to get broken. And we
saw that.
we've seen that. So it would seem that the Fed has got the market's already pricing in 25 basis point raise. So that's likely what they're going to do. I would expect them to take a bit of a pause. The next meeting is in May, so let it just ride a little bit and let the system adjust to the new environment we're in. There's nothing wrong with that, and it's we're interest rates are a reflection of where we are in the economy, but the economy is also improving, and that inflation is coming down. So it's working, and like we've discussed on the show before, my view that this was a supply side inflation versus the Fed view that this is a demand side inflation, and we're going to have to find a balance between the two. And maybe we're there. Maybe it's another 50 basis points higher. What the discussion in the economic circles is, what's the terminal rate? 5.5%. Where are we going with this thing? So if inflation numbers continue to react the way they are, we could be at the end of the cycle. And if that's the case, then that's going to affect the dollar, right? Because the dollar's been sustaining its value, the dollar index against the basket of currencies pretty well over the course of the last 6 months of this tightening cycle. So we're still seeing dollar strength. And if the dollar should start to weaken, then that's going to really bode well for international stocks. So the European stocks, the ETFs that are country level, those will be interesting. The Asian, some of the selective Asian stocks, we've always liked, like Portugal and Indonesia. Indonesia's got some funky things going on right now, but that's always the case. Mexico for a nearshoring play. I know they're the country level ETF's been off a bit, but
how's Turkey doing? Didn't you say Turkey was the best performing international stock
last year? Turkey was the best performing, and that was largely based on a turnaround from the previous year and their ability to act as an intermediary for goods traveling in and out for Russia. So they were
I don't think I've ever bought a Turkish stock before. I think you got to have a little nerve to go in there and pick out some stocks there. But I guess that's for you guys, you international traders. Well, I mean, you buy a basket of stocks in Turkey, or do you buy individual names?
We do country level ETFs.
Yeah, okay. So you're not just picking one stock in Turkey.
No, I'm not. Okay. You got to have you got to have the resources to have somebody on the ground to be picking in those countries, to be picking those stocks. But you can, on a relative basis, based on the indicators that we look at, make a determination whether, say, Italy is a better buy than Belgium, or Turkey is a better buy than Saudi Arabia, or something, intra-regionally. That you can look at that, and that's what we look at. I mean, that's kind of our international model is based on a book, and the book basically was on how to judge an economy if it was going to go under. And so we flipped the equation. We thought, well, if you just change the paradigm, how do you judge it if it's going to do well? It's called Why Nations Fail. I thought, well, why do nations succeed? Right?
That's back for the back door.
If you use the same factors, these are algorithms. If you use the same factors and you can measure those factors and you can score them, and then you can weight them, that's how we make the algorithms, then you can determine the value of one asset over another asset, as long as you're using the same scorecard, right? Now, this is all moving very quickly into the AI sector, which is why we picked up an AI company last year. But there's still, even in the construction of those portfolios, an awful lot of me and not enough of AI, right? So I'm still determining, well, what are the good factors, and what are the scores? What's a good number within that factor, and how do we weight that? And the reality is that's got to be determined by the machine. So the machine can spit out the number, and then you can balance a portfolio relative to the other elements. So like if France is a higher rating, if you're doing a European one, if France comes out higher than Italy, then France might have, 7.8% of the portfolio, and Italy might have 5.2. That's kind of how that works. It's pretty cool.
Same thing with the S&P 500 sectors. Sometimes you overweight some and underweight others.
Exactly. Unfortunately, the S&P index, though, it tends to be more market weighted, and that's where it can, you can run a follow on that. But that's the index.
Yeah, but there are some fund managers that will overweight and underweight further.
Absolutely.
In their own size they buy. Let's talk banking a little bit here.
Yep.
The market looks pretty happy today through a $2 trillion backstop on the banks. Now, what's going on First Republic? Have you checked them out at all today?
Yeah, their stock is down again today, and something's going to happen. But it's almost like the inflation issue. Like on the supply side equation for the inflation issue, you just had to wait for the supply chains to work themselves out. With First Republic, they're not a bad bank. They're not a good bank. They're just kind of in the middle. If they had a little bit of time, things would probably be okay. But I don't think the market's going to give them the time. So I know Bank of America is in there, and the Fed's trying to force a marriage, and maybe it happens, maybe it doesn't. But I don't really see
going to happen. They're not going to let them fail. We've already seen that last weekend with Silicon Valley. But we talked earlier, Joe, about the deposit size of Republic Bank, and I'm sure with Silicon Valley Bank the same thing. Much larger deposits. I read somewhere, I'm not sure if this is true, that Oprah had $500 million in Silicon Valley Bank. But the deposit size on First Republic is much bigger, than an average bank. Well, so that's why they're not going to let those banks fail.
As I understand, it's about the average deposit is about $1 million, where the normal bank average deposit is about $50,000. And if Oprah has $500 million in Silicon Valley Bank, I think we know why that bank got saved.
Exactly. Well, again, I read that, so I don't know if that's true or not. But
right.
I would hope that she would have it split up among other accounts, because you only get $250K insurance per account. Now maybe she had 100 accounts there, but or maybe she had it all in one and they just took care of her.
Oh, look, if you're wealthy, you're not putting it on a deposit. Maybe you buy a CD, I don't know, but chances are you're buying treasuries, right?
Yeah.
So you got it on deposit, but you're buying 3-month bills, or you're buying you're buying into their money market. So the money markets have, they're still intact. Everything seems to be going pretty well. So look, on that same theme, our view here is that, in like a March, it's springtime, and in the old farmer's adage.
It's at 5 o'clock today. 5 o'clock today, Joe.
5 o'clock today.
It's winter still.
It's still winter. We're gonna make it out though. Now the old adage, the farmer's adage, is March in like a lion, out like a lamb. Maybe that's true for stocks this year. Maybe we just had a rough first half of March, and as we get into the second half, things could look a whole lot better. So this could be one of those times where the market gets beaten up a little bit and everybody gets a little scared, but the smart money's buying, and people are going to do okay. The regional banks are pretty solid. Deposits are something like 200% in aggregate, 200% above non-performing loans. That's really very secure. There's not going to be I don't think there's going to be a problem here. I would say that if you look at the regional bank ETFs, they've been just beaten down. Maybe there's some value there. Maybe now is the time to think about regional. Banks are going to be here tomorrow, and they're going to be here next year and in 5 years. So
Joe, we're going to take a quick break. Remember, listeners, any questions about your portfolio, give me a call anytime. And any questions about the show, you want to talk further, always feel free to give me a call at 518-255-8854, or you can email me at edgardner@cutterco.com. We'll be right back.
All opinions expressed by Ed Gardner and or his guests on the Money Nation show are solely Ed Gardner's and or his guests' opinions and do not reflect the opinions of Cutter & Company or any of their affiliates. You should not treat any opinion expressed by Ed Gardner and or guests as a specific inducement to make a particular investment or follow a particular strategy, but only in as an expression of their opinion. Ed Gardner's and his guests' opinions are based on information he considers reliable, but neither Cutter & Company nor affiliates and or subsidies warrant its completeness or accuracy, and it should not be relied upon as such. Always talk to your financial advisor before making such decisions.
Welcome back to Money Nation. So, Joe, what do you think about my new? I'm wearing a cap here. I don't usually wear caps, but this is the new Team ICO J24 sailing hat. What do you think?
Nice. I love it. I want
USA
one.
2507 is the number of the boat. On this side, we got the Team USA Olympic patch. How you like it? Got the
Well, all
Steely.
I've
The
got
boat's
to
name is
say
ICO.
All I've got to say is that my birthday's in May.
Everyone wants one of these. My
I
friends
bet
are
they
going,
do.
Ed. I go, you're not on the crew, but I'll have to make some extras. Everyone seems to like them.
Yeah, we'll wave the flag
so
out this way.
We got the flag on there. We got the Steely, and then we got the name of the boat. Joe, let's finish up with banking before we check out with gold and Credit Suisse. A couple of other news things are happening today.
Just to touch on the banking, as you know, I'm sure you've seen in the news that UBS was in a forced merge to buy Credit Suisse. Credit Suisse had been a problem child of European banking for a long time. And so this was something was going to happen. And the government, the Swiss government being Swiss, forced the merger and capitalize the banks accordingly. UBS is going to cut out the investment bank, the whole division at Credit Suisse. So you'll see a bunch of guys like me coming on the market real soon. But I wanted just to point out that the press conference for the merger was just one for the ages. These guys looked miserable. They just couldn't. They couldn't manage a smile between them, and so it will be interesting to see. You know, because when you have these mergers, it starts at the top, and you know people lose their jobs, and people go away, and people are bitter, and then they get paid something, and they're happy, but they're still out of a job and a lot of ego there, right? These guys, they just look miserable.
Yeah, I think someone above them told them this is what's going to happen with you two guys. No one's going out of business here, and you guys are going to be partners now. You know,
that was a shotgun wedding.
Gold prices are moving here, probably with all the instability about banking and the markets in general. Gold's been a good place to be. What do you think about the gold price of bullion?
I don't remember a 5-day run like we've seen here recently. I mean, we're up right now at just below 2000 at 1976. Bitcoin the same. I mean, Bitcoin was under 20,000. Just seems like maybe 2 months ago. You know, just recently it's at 27.5 right now. So you know those assets have they're having their moment, and gold for sure. I think look, there's war. There's still some global issues that are playing out. Gold, having a little bit of money in gold is never a bad thing.
That's why people do that. They put some in there for times like these,
Absolutely.
And it seems to be working very well.
Yeah. So Fed's going to raise rates. Stock market looks happy. Regional banks, I think, are a cool place to think about. Look at the ETFs. If the Fed starts to, if the dollar starts to dip below 100 on the index, those international stocks are going to look pretty groovy. Pick your markets, but look, it's Ed Gardner's market. It's a stock picker's market. So if guys like you can find some value in some of these regions or some of these sectors, that's your bread and butter, brother.
Interesting movie on Netflix last night. Eat the Rich. It's the story about GameStop. And very, very interesting. Do you get a chance to look at that at all?
Yeah, I saw that when it first came out. It was a fun movie. Absolutely.
And how long's that been out? Is that I just saw that recently on the Netflix. Eat the Rich.
It must have been a month ago or something. I saw.
Okay.
I've seen it recently though, and I like the thesis. Like the whole theory like behind Robinhood was democratizing investing. Right. You can do it on your phone. You can just flip a switch and off you go buy a stock. But there's some of the mentality is that the gamification of investing was part of that as well. And there's some You remember when it was going on, it was kind of fun to watch. I didn't get involved in it because I asked my son, my 17-year-old, and I was just like, why didn't you tell me about GameStop? He goes, who'd buy that stock?
Listen, the buildings were going out of business. They were empty.
Yeah.
There were storefronts with nothing inside them. Who would have thought? I mean, you can see why these guys were shorting them. It probably made pretty good sense on the outside.
No doubt.
And these couple, the one young kid there who what they basically do is write like a broker report and put it on Reddit. It's pretty funny that they could do that. Obviously, you and I aren't allowed to do things like that, or any Series 7 broker cannot post anything anywhere. But these people who aren't brokers, they start posting things. They start getting a following of thousands of people reading their, reports. And this one kid had a report while he liked GameStop, I guess, for even all the negative things that were out there. I think the rise in short interest, though, they were following that and they played on that. They knew that was a big thing and that could light the fire underneath the stock. Very interesting. And now it's also when it ended, that's just the first episode. I guess there's a lot more episodes on there, but I thought it was very interesting, and it's a whole new world out there. Before
GameStop is
firms with their Bloombergs that dominated everything. Now there's a lot more information out there, and we'll see what happens with those GameStop, and it's an interesting story to say the least.
So we scrape the social media feeds, Reddit being one of them, and we use natural processing language to determine if it's a bullish comment or a negative comment or somewhere in between, and that gets scored, and that goes into the algorithm we were just talking about, and how we end up picking stocks using AI. But that's a pretty powerful tool, that natural processing language, and it's one that we should discuss in detail. I should have my guys on sometime and discuss in detail with you.
Yeah, it's interesting. It's another thing to look at. If you like a stock for fundamental reasons, and you also see all kinds of exciting chatter, or say for a better word, or interest coming from these social platforms, makes sense. You could have some more buying coming in there, and same on the other side. I'm not sure if you want to, how much you put into it, but it's very interesting. It's new frontier stuff by to say the least.
Yeah. So this stuff will be better, codified in a year from now than it is today, but it's happening. And, the GameStop, Eat the Rich show on Netflix just really is scratching the surface. And I haven't checked GameStop in a good long time, but, I know it went up to 200 and something. And I last time I checked, I think it was in the 20s. It's not like it went out of business. Still just kind of still there.
Yep.
Can you imagine the wives? Can you imagine the wives of the CEO and the chairman of the board when that thing's going up to $250?
It's funny. Kramer was on that Eat the Rich, and he said he had a surgery, and he was like knocked out for several days, and he wakes up like 3-4 days later, and he goes, GameStop's at 400, and the first thing he has to do is call and say, I think he sold it or shorted it or something, but he was. Then people hated him because he said something that was kind of obvious, and it was pretty funny. He was saying how people on the internet just putting his face on emojis and all kinds of funny things, and just harassing him and torching Kramer, poor Kramer.
Yeah,
pretty funny stuff.
Joe, he'll be okay.
Hey, have a good week here. We're gonna get going. Nice talking to you. I'll probably see you next weekend.
Yeah, one last thing. Just note that the Chinese premier is in Moscow right now. We think they're talking whatever they're talking about. We think he's pushing his 12-point plan for settlement in the Ukraine. So we'll see what starts to come out. He's got a plan. It's a bit nebulous, but so what? They just came off the success in the Middle East with Saudi Arabia and Iran. Now I think he's going to make a play and push, and we may be in the end game of what's happening in the Ukraine.
End game. Love to hear that. End game is where you want to be. Yeah,
absolutely.
Joe, thanks a lot for being with us.
You bet. Thanks, Ed. Have a great week.
Remember, listeners, any questions about your portfolios or any questions in general, feel free to give me a call, always at 518-255-8854, or you can email me at edgardner@cutterco.com. Thanks for being with us on Money Nation.